a first principles approach to life insurance and annuities. Let's break it down on this episode of the Hawaii Retirement Show. All right, welcome everyone. Thanks for tuning in and listening to the Hawaii Retirement Show. Today we're going to talk about breaking down life insurance and annuities from a first principles perspective. And I just Googled first principles thinking just to get a definition to share with you for those that don't really, you probably have heard of it, but maybe you're not familiar with it. But first principles thinking is a problem-solving method that involves breaking down complex problems into their most basic parts and then reassembling them from ground up. Okay, so all it is breaking it down to its most simple, basic parts, and then and looking at it from there. So the reason these things kind of came to be is a lot of times in the life insurance and annuity space, these products, these policies can just get terribly complex. So complex that a lot of times the people selling them don't even fully understand them. I mean, they come with these, policies that are very thick and dense with legal language. They're very complicated. But what I thought we'd do today is let's break it down to first principles thinking about life insurance and annuities. And when we do that, at its most basic point, we'll start with life insurance. What is the purpose of life insurance? It's to insure a life, right? It's not any other reason than that. That's why life insurance was created at its most basic first principles thinking. A lot of times there's all different policies, whole life, term life. And there's a lot of policies that include investments, cash balance accounts, and all these other things. But it's important to understand whenever you're looking for life insurance, the reason you should need life insurance is not for anything else other than I need to insure a life, right? There are other reasons too that get very complex, but looking at it from first principles, life insurance is to insure in life. So if somebody passed away, then there would be money to support, aid or help somebody else accomplish something if someone was to pass away. That's why you'd have a policy on somebody. Now, looking at annuities, taking a first principle approach to annuities, it's kind of the reversal, the flip side of life insurance. And what I mean by that is life insurance, you're insuring against somebody who might pass away early, right? They might pass away and they have a wife, kids, or whatever it might be, and they need to provide money or support for somebody else. So you're protecting against if they pass away. Now, an annuity, at its first principles thinking, is protecting against longevity. What if the person lives for a extremely long time, till 100 years old or beyond, right? And what annuity will do is make sure that you don't run out of money. So you can give a lump sum of money and say, I'll give you this much, but you're going to pay me this set amount for as long as I live, right? No matter how long that is. So even if I live till 100, you're going to keep paying me the same amount. If I die in the next 5 years, well, then you made out because, you're going to pay me this set amount for my whole life, but I passed away early. That's essentially it. Once you start mixing in other things like investments and all these other riders and all, you start to get more complicated. I'm not saying there's not a place for them. There absolutely is. But I just thought it'd be good to come on and talk a little bit about first principles. What are we trying to accomplish with life insurance, and what are we trying to accomplish with annuities? Once you start tacking things on and changing it and repackaging it, adding bells and whistles, you kind of start deviating from what is the purpose of this. And again, I'm not saying that is always wrong. Sometimes there is perfectly reasonable cases for doing that, but you're just dressing up something and furthering yourself from the original purpose of the product, right? I'm big on fundamentals. I'm big on KISS, keep it simple, stupid, right? Big on, the bank shot in basketball will always work. It's not pretty, it's not sexy, but it works, right? So I like to keep things simple. A lot of times in financial planning and financial services, there's a lot of complication added to things. Sometimes justified, a lot of times maybe not. But I hope you took something away from this. First principles thinking, life insurance, annuities. Thanks for tuning in and listening, and we'll catch you on the next one. As always, mahalo for tuning in and listening to the Hawaii Retirement Show. If you haven't already, please subscribe to the show on whichever platform you choose to listen on. If you have a retirement planning question that you'd like us to talk about on our show, please email it over to aloha@hawaiiretirementshow.com. And until next time, aloha and happy planning.
The opinions and statements presented on this show are for general information only and are not intended to provide specific advice or recommendations. Never make any investment or financial decisions based on information offered on this show without first consulting your financial, legal, or tax advisor. All economic and performance information mentioned on the show is historical in nature and is not indicative of any future results. All indices mentioned on this show are unmanaged and cannot be invested in directly. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. Lastly, all opinions expressed by Jason Cutitta and any guests on the show are solely their own opinions and do not reflect the opinions of or are endorsed by ToBA Financial. For Jason Cutitta, investment advisory services are offered through ToBA Financial LLC, a registered investment advisor offering advisory services in the state of Hawaii and in other jurisdictions where exempt from registration.